Most investors think a silver bull market begins when the price starts making headlines. History suggests something very different. By the time silver becomes a popular topic at dinner tables, on financial television, and across social media, much of the move has often already happened. What makes the current environment so interesting is that many of the forces that have historically driven major silver advances are quietly lining up at the same time. And yet, most investors haven't noticed. While headlines remain focused on artificial intelligence, stock market valuations, interest rates, and geopolitical tensions, a much bigger story may be unfolding beneath the surface. A story involving global supply chains, energy transition policies, industrial demand, government debt, currency concerns, and one of the most important metals in the modern economy, silver. Here's what's really happening behind the headlines. Few people understand the chain reaction that could unfold if current trends continue, because silver occupies a unique position, unlike almost any other asset on Earth. It is both a precious metal and an industrial metal. It has been used as money for thousands of years. At the same time, it is essential to technologies that power modern civilization. And perhaps most importantly, silver belongs to a very small group of assets that have survived every currency collapse, every empire, every financial crisis, and every monetary experiment throughout recorded history. Gold, silver, and productive land. Three assets that have never gone to zero in more than 5,000 years of human history. Today, we'll explore 6 critical insights. Why silver's recent breakout may be more significant than many realize. The hidden supply challenges facing the mining industry. Why industrial demand is changing the silver market. What history teaches us about periods of monetary uncertainty. Why governments, institutions, and central banks are increasingly focused on hard assets, and what all of this could mean for ordinary people trying to protect their purchasing power in an increasingly uncertain world. Because while most investors are watching the stock market, the bond market, and the latest economic data releases, they may be looking in the wrong place. The real story could be developing in the commodities that modern civilization cannot function without, and silver sits near the center of that story. So let's connect the dots. The first thing to understand is that silver's recent strength is not occurring in isolation. It is part of a much larger macroeconomic picture. Here's what most people don't realize. Markets don't move simply because investors decide they like an asset. Markets move because underlying conditions gradually shift until prices can no longer ignore reality. Think of the global economy like a machine. Every machine requires energy, raw materials, financing, transportation, and confidence. When pressure builds in multiple areas at the same time, unexpected consequences can emerge. Today, we are seeing rising geopolitical tensions, growing concerns about sovereign debt, persistent inflation pressures, supply chain vulnerabilities, and a global race to secure critical resources. At the same time, precious metals are attracting renewed attention. Central banks worldwide have continued accumulating gold reserves at historically elevated levels. The World Gold Council reported that central banks purchased more than 860 tons of gold during 2025, remaining far above long-term averages. Even more remarkably, recent European central bank analysis suggests gold has surpassed U.S. Treasuries as the largest reserve asset held by central banks globally. Why does that matter for silver? Because precious metals often move in cycles. Gold typically attracts institutional and central bank attention first. Silver often follows later. Mainstream coverage tends to focus on daily price fluctuations. But the deeper story involves resource security, industrial demand, monetary confidence, and long-term supply constraints. If you're interested in understanding the forces shaping precious metals and the global economy, consider subscribing. I post videos like this regularly. To understand why silver could become increasingly important, we need to look at the supply side, and this is where things become interesting. Imagine trying to fill a swimming pool while someone keeps turning off the hose. That's essentially the challenge facing global silver supply. Many people assume higher prices automatically create more production. In reality, mining is far more complicated. Silver production cannot be increased overnight. Discovering a new deposit can take years. Permitting can take even longer. Building a mine often requires enormous capital investment and significant energy consumption. Meanwhile, ore grades have been declining across many mining regions. Miners must process more rock to recover the same amount of metal. That increases costs. Energy costs matter as well. Mining is one of the most energy-intensive industries in the world. When fuel, electricity, and labor costs rise, margins become compressed. Now add geopolitical uncertainty. Mexico and Peru remain among the world's largest silver-producing nations. Any disruptions involving regulations, taxation, labor disputes, permitting delays, or political instability can affect future production. China controls significant portions of global mineral processing capacity. Russia remains a major commodity producer. Australia and Chile face their own challenges related to infrastructure, environmental regulations, and resource development. The result is a supply system that lacks flexibility. And unlike gold, much of the world's silver is produced as a byproduct of mining for copper, zinc, lead, and other metals. That means silver production often depends on economics elsewhere in the mining industry. Even if silver prices rise sharply, supply cannot always respond quickly. This helps explain why the silver market has experienced multiple consecutive years of structural deficits, with demand exceeding newly mined supply. And that brings us to demand. Because the demand story may be even more important. For decades, many investors viewed silver primarily as a monetary metal. Today, that view is incomplete. Silver has become one of the most strategically important industrial metals in the world. Its conductivity, reflectivity, and antimicrobial properties make it difficult to replace in many applications. Solar panels require silver, electronics require silver, medical technologies require silver, defense systems require silver, telecommunications infrastructure requires silver. Electric vehicles use significantly more silver than traditional internal combustion vehicles. Data centers supporting artificial intelligence consume vast quantities of electronic components that depend on silver. This creates an unusual dynamic. Gold demand is largely financial. Silver demand is both financial and industrial. Industry now represents the majority of annual silver consumption. Multiple market analyses estimate that industrial demand accounts for roughly 55 to 60% of total silver demand. In other words, silver is not simply competing for investor attention. It is competing with manufacturers, energy companies, technology firms, and governments. That distinction matters, because industrial demand tends to be tied to long-term infrastructure projects and strategic priorities rather than short-term market sentiment. If this analysis is helping you connect the dots, subscribe and join our growing community here at Precious Metals Alert. History offers another valuable perspective. History rarely repeats perfectly, but it often rhymes. During the inflationary 1970s, precious metals experienced extraordinary volatility as investors sought protection against declining purchasing power. Following the 2008 financial crisis, concerns about monetary stimulus and systemic risk helped drive renewed interest in hard assets. During the COVID era, global supply chains revealed just how fragile modern production systems can be. Factories closed, transportation networks stalled, critical shortages emerged in industries that previously assumed uninterrupted supply. Each event was different, but the pattern was similar. Periods of uncertainty often force markets to reevaluate risk. They force investors to ask difficult questions. What happens when debt grows faster than economic output? What happens when governments run persistent deficits? What happens when confidence in monetary systems begins to weaken? And what happens when strategic resources become harder to secure? Silver has historically responded to these types of environments because it sits at the intersection of monetary psychology and industrial necessity. That doesn't mean prices move in a straight line. They never do. But it does explain why silver repeatedly re-enters the conversation during periods of economic transition. The lesson from history is not that silver always rises. The lesson is that scarcity eventually matters, supply eventually matters, and purchasing power eventually matters. Which brings us to why smart money is paying attention. Institutional investors, family offices, sovereign wealth funds, and central banks may not agree on everything, but many are asking similar questions. Global debt levels continue reaching extraordinary heights. Governments across the developed world face growing fiscal pressures. Interest expenses consume increasing portions of national budgets. Meanwhile, geopolitical fragmentation is encouraging nations to diversify reserves and reduce dependence on any single financial system. The World Gold Council reports that central bank gold demand remains historically strong, even after several years of elevated purchases. Countries including China, Poland, Turkey, Brazil, and Kazakhstan have all increased gold holdings in recent years. While central banks generally buy gold rather than silver, the broader message is important. They are seeking diversification. They are seeking resilience. They are preparing for a world that may become less predictable. BRICS nations continue discussing alternative trade arrangements. Currency competition is increasing. Questions about long-term dollar dominance remain part of the global conversation. None of this guarantees any specific outcome, but it helps explain why tangible assets are attracting renewed interest. If you're finding value in these deeper macro insights, consider subscribing because we cover the stories mainstream media often overlooks. So what does all of this mean for ordinary people? Perhaps more than many realize. Because this story is not really about silver. It is about purchasing power. It is about preserving options. It is about understanding risk. Most people spend years building savings. They contribute to retirement accounts. They invest for their family's future. But inflation quietly reduces purchasing power over time. Currency debasement can occur gradually. Debt accumulation can create long-term consequences that are not immediately visible. No one can predict the future with certainty. No analyst can guarantee where silver, gold, stocks, bonds, or real estate will trade next year. But understanding the forces at work allows people to prepare rather than react. That means diversification. It means long-term thinking. It means avoiding excessive leverage. It means maintaining liquidity while also considering real assets. And it means recognizing that wealth preservation is often more important than chasing maximum returns. The investors who navigate uncertainty most successfully are usually not the ones making the boldest predictions. They are the ones who understand risk. They remain patient. They stay informed. And they position themselves thoughtfully for multiple possible outcomes. As we conclude, let's return to the bigger picture. Silver's breakout is not just a story about price. It is a story about supply and demand. It is a story about industrial transformation. It is a story about resource security. It is a story about debt, currency confidence, and the changing structure of the global economy. We've explored how mining constraints can limit supply. We've examined the growing industrial demand created by solar energy, electrification, electronics, and advanced technologies. We've looked at historical periods when uncertainty pushed investors toward hard assets, and we've discussed why governments and institutions continue paying close attention to precious metals and resource security. Most importantly, we've highlighted a simple truth. Markets move in cycles, headlines come and go, but the laws of supply and demand never disappear. The world is changing rapidly, technologies evolve, governments change policies, financial markets shift direction, yet the fundamental principles that drive scarcity, value, and purchasing power remain remarkably consistent. Silver may or may not become one of the defining investment stories of the coming years. No one knows for certain. But the forces influencing the market today are real. They deserve attention. And they are far more significant than many people realize. Pay attention to the trends most people ignore. Because sometimes the biggest opportunities emerge long before the crowd notices. If you found this analysis valuable, please like the video, subscribe to Precious Metals Alert, and share it with someone who wants to understand the changing world around us. Until next time, stay informed, stay prepared, and keep your eyes on the metals.